What's up, traders? It's Andrew O'Connell with Pristine Capital coming at you with yet another market recap video. It is November 10th, 2021. Please go ahead, do me a huge favor, click the like button on this video and also subscribe to my channel. That way you don't miss any future videos. Today we're going to talk about the price action, the indices. We're going to talk about market conditions and how I am dealing with those conditions. Before we do that, quick disclaimer, nothing in this video should be construed as investment advice or recommendations. Please follow your own trading plan and your own risk parameters. And last but certainly not least, do not YOLO your entire account to any one of my trades or anyone's trades for that matter. All right, let's dive in, team. So, box scores for today. Oh my gosh. So today was the day where if you were not properly managing your risk, this was probably a really challenging day. S&P 500 is measured by the SPY down 0.8%. We had the NASDAQ QQQ down 1.47%. IWM small caps down 1.58%, our big loser for the day. And then we had the Dow Jones trade down 0.61%. We had the volatility index for all four of these indices rising. You can see the VIX was up 5.34%, so on and so forth. And then the breadth was negative across the board. We had worst breadth in the NASDAQ, only 31% advancers. And we can see we had the best breadth in the Dow Jones with 40% advancers. So today was pretty much a bloodbath. You know, that is for certain. And if you've been watching these videos, if you're a member of the Pristine Capital trading community, you know, we were pretty well prepared for this breakdown in the market. Yeah, you know, it's all about being prepared. You know, I had a couple of short positions on. You know, I've been paring back my risk. So this, you know, is not a big deal. And what's cool is when you're prepared for a market sell-off, you can actually look at the sell-off as an opportunity. So that is awesome. That's how we're viewing this. This is all good stuff. FinViz heat map, we can see we had, you know, big bloodbath in the FANG names. What I noticed was pretty much everything that was showing really high momentum. A lot of those areas of the market struggled. We did have some strength though. MasterCard was up 3.86%. We had some strength in healthcare and utilities as well. Tesla was up 4.34%. And I did see a headline after the market closed that apparently Elon Musk, you know, he was going to sell 10% of his stake in Tesla. He sold that all yesterday. So that's actually a good thing for Tesla in that, you know, that negative catalyst, it's already behind us. So now we can just look forward. Sectors we had, you know, again, a bloodbath across the board. A lot of these now they're starting to get a little bit more enticing, but my trend model is at a -1. So my trend model is at a -1. That's when my goal shifts from let me try to make a lot of money to prioritizing I don't want to lose money. Now that's a common misconception with traders that every single day your objective is to make money in the market. You want to be trading as if you are the casino. What I mean by that is when the odds are really stacked in your favor, that's when you want to be playing the most aggressively. When the odds are not stacked in your favor, you know, if I only have, like, look at this market breadth. You know, we had about 30 to 40% of stocks advancing today. That means if I picked any one stock, my odds of winning on that stock, you know, were 30 to 40%. Do I want to be playing in those conditions? No, I want to have the best conditions available. So we can see, look at all these areas that got blown up. So we had the blockchain assets down 5.12%, absolutely sparked. We had cannabis down, innovative tech down, all of these down. You know, these ARK funds were down big as well. So yeah, there weren't really that many bright spots. We did have the gold miners. They're now in our top momentum slot, up 1.77%. So that is noteworthy that now they are the top dog. Style factors, we can also see here high beta was down 2.4% and momentum was down 1.05%. Growth was down as well. And that shows us, hey, this was a very risk-off environment. The only positive sectors were defensives and high div low vol. Those are very defensive areas of the market. So yeah, complete risk off day today. Let's take a look at these headline indices. Let's check it out here. That's my position log. Oh, whoa, that's for members only. Let me see. All right. let's check out our indices. So trend model is at a -1. And again, when that's at a -1, I just want to be conscious. Hey, this isn't the most ideal environment for me as a swing trader. When this flips, what I can do is put on my day trading hat. Take things with a little bit of a shorter time horizon because you don't really know what's going to happen next. And just protect the capital. That's really the name of the game here. S&P 500 closed below the 5-day EMA for the first time, really since this uptrend started. So when things that are completely different happen, you should definitely take note of that. So we haven't closed below the 5-day EMA since early October. So October 13th, it was our first day below it. So that is definitely significant. Could we end up getting, a nice gap higher tomorrow? Absolutely. And there will be a lot of people, or if we get that gap higher, they're going to go, oh my gosh, I can't believe I missed the bottom. And they're going to jump right in. The key is, if we're now in a downtrending environment, what you typically see in those market regimes is a very strong open, and then the market softens throughout the day. That's exactly what we saw today, right? That's the typical pattern when you're in a sell-off. What I would much rather see from the long side is a gap down, and then the market strengthens throughout the day. So we'll have to see what we get. Let's take a look at our hourly chart. I've been watching the hourly chart a lot more closely now that we're at these key decision points. So yeah, what we can see here is, I mentioned this in Twitter Spaces last night. Hey, we're starting to make lower highs in the S&P 500. And we were straddling this weekly value area high. We were, tagging it, bounced off it, dipped inside, bounced off, dipped inside again. And then the dam broke today. And here we are. Now we're trading inside this weekly value area. We did trigger a bearish 80% rule right here. So basically what that means is, now since we have established ourselves inside this weekly value area, the odds have increased of us tagging the opposite side of value. So if this market was to just really be like super cruel, what could end up happening is, we retest this weekly value area high. That would be the ultimate, everyone would FOMO back in. And then if we were to drop from there, that would just be devastating. But what could also happen is, we just have a very feeble bounce, and, we start testing this weekly point of control. You can see buyers stepped in here before we even tested the weekly POC. But yeah, I would not be surprised if this 46.19 spot 5 level is tested. So yeah, definitely, just a lot to look at. I would love to, just be in a position where if we do get to this bottom of value, I can be aggressive and start adding to positions. That would be awesome. Let's take a look at some of these other indices. Let's see what we got. Nasdaq's trading up 0.08% in the after hours, but yeah, for the Nasdaq, we closed below the 10-day EMA. So do I think it's highly likely that we at some point test this 20-day moving average? Absolutely. Would that be a point where I would like to get long some Nasdaq? Yeah, probably. Let's actually take a look. I want to pull up some of the big names in the Nasdaq that I typically watch. So let's pull up all these. Let's check out the charts. We got Google. Yeah, Google basically a pullback to the 20-day. Nothing bad about that. It looks pretty good. And we have, let's take a look at Microsoft. This has been the big kahuna. Yeah, Microsoft looks fantastic as well. Let me pull this up over here so I can see all my key moving averages. Yeah, so Microsoft pulled back to the 10-day EMA. Does it even get to the 20-day, or is it so strong that maybe it doesn't get there? Yeah, that's the real question. Let's take a look at Facebook. I had a position in this one and I closed it out for a nice winner the other day before really this meltdown started. Yeah, Facebook definitely not the leader here. Yeah, some of these FANG names are starting to look a bit more enticing. Let's start with that. Let's check out our Russell. And the Russell, this is the one I was super bullish on. Had a really nice sequence in the Russell. Now the Russell also pulling back to that 10-day EMA. If the Russell remains super strong, this could be an appropriate place start looking to add exposure. But again, I don't want to get ahead of myself. I don't want to, FOMO you guys that are watching this video into getting ahead of yourself as well. And you want to wait for the confirmation. The worst is, basically like when you just try to anticipate a bottom, and it's like you just try to go for the bottom. So much money is lost trying to like bottom fish the market. It's much better. Most people don't do this, but you wait for a bottom to be established and then you get long. You're guaranteed to miss every bottom, but you're also guaranteed to not, kill yourself trying to, discover the bottom or, be that guy that gets to it first, or that girl. Let's take a look at our Dow Jones, down 0.11% after hours. Dow Jones also pulling back to that 10-day EMA. Let's check out our seasonality. So this is another thing to be cognizant of. Seasonality, now we're well into November. Yeah, it is November 10th. So we're even further along than this. We're about a third of the way into November. Look at the seasonality. The seasonality's choppy at best, with some downside risk at worst. So this to me is like, I just want to make sure slow and steady wins the race. I would not be surprised if we fast forward 2 weeks and it's, wow, if I hadn't traded anything at all over these past 2 weeks, I would have been a lot better off. That's likely going to be the case for most people. So yeah, keep in mind the seasonality is not really your friend until we get to the end of November. Then it really cranks up again. So we want to be in a good position where we can take advantage of that. We don't want to be like licking our wounds and like, oh my gosh, we blew up in the process and now let's try to build back. We want to keep compounding. All right, my trader report card. Let's take a look at it today and I'll go through my trades. So trader report card, I gave myself for preparation a 5. I was well prepared for the market session. I knew exactly what I was going to trade. Stock selection, I gave myself a 5. You'll see the only common stock that I put on was Pubmatic. And the reason why I gave myself a 5, I was well prepared for it. They had very strong earnings, high short interest, all the reasons why I want to be entering a stock. But I did give myself a 2 for risk management today, because I'm trying to be as brutally honest with myself, because that's the only way I'm going to get better. And yeah, I want to send out good trade alerts to Pristine Capital members. So yeah, for me, it's super important. I'm just honest. My risk management, I think by most standards was good in that, I wasn't just taking on a bunch of positions. But there were 2 things. So this brings us to my first trade here. Let's take a look. So these are getting into yesterday. We already went through these in yesterday's video. Okay, so these are today's trades. So I got long Pubmatic common shares in the pre-market for $39.79. I think this was good in that, hey, I saw the market conditions were a little bit weak. I still wanted to take this trade because I thought it was a really good potential setup. But I entered with a 3-star position. So when my trend model flipped to -1, I should not be entering 3-star positions. I should be sizing a bit smaller. So this is where I dinged myself for my risk management, because it all worked out. I ended up getting stopped out of this Pubmatic for $36.23. Very manageable loss for me. No worries, built into my system, whatever. But if I want to be at the top of my game, this is a game of inches. I don't want to be entering with that size. If I had entered with a 2-star position or a 1-star, this loss would be, considerably smaller. So this is really like, it's a game of inches. If you want to get better, you have to analyze your results like that. The other thing too is I could have identified, hey, this is a weak environment. At one point, Pubmatic was trading up to like $41. I think it even hit 42. That would have been a nice spot to maybe take a target and work this down to a 2-star position. So yeah, I gotta ding myself a little bit. Overall, I don't think it was that bad though, getting long Pubmatic. I still have that on my watch list. Options trades, I did take some SPY put options. Because my model flipped negative, I've been watching that weekly value area high. Once I saw it was violated, got long a lotto trade. So I got long the daily 0 DTE, 0 days to expiration, November 10th, 466 SPY puts for $1.49. And ended up having some nice exits here. So I closed some out at 196. I closed some out at 216. Closed some out at 355. That was awesome. And I closed some out for 283. So I ended up having a really nice trade in the SPY. So for me, like when the market is down, huge, to be able to just like get a base hit like this on a lotto trade, that means the world. In environments like this, if you can get a nice base hit, when the market is not really in the best trend, that's like a huge win. Who really cares? Like a base hit is everything. Ideally, all you want to strive for is not losing money. So even no trade is the best trade. But yeah, if you can somehow manage to make a couple bucks, that is awesome. So yeah, very happy with this one. And then let's take a look at our cryptos overnight, and then we'll take a look at some VigTech options order flow before we sign off. Yeah, crypto is pulling back. Overall, I don't think this is the end of the world, but yeah, not the best price action. The volatility starting to come in. This also supports the -1 environment. Now let's check out our VigTech options races. Let's see what was going on. Ooh, Wendy's. That makes me hungry. Oh my gosh. Oh yeah, and I'm also, while the options race is going here, I'm being tasked by my girlfriend to make a really nice dinner tonight. I'm the worst at cooking, so I gotta figure something out. So drop me a comment in this video if you know something good that I should make for my girlfriend that's easy to make that would still impress her. All right, today's combined flows. This is via VigTech. Okay, let's check it out. So we have Tesla. Let's see how much premium went into Tesla. We have, whoa. Okay, 6 billion. That's like a more reasonable level for this environment. But yeah, let's check out what people were buying. So we have Tesla, Amazon, SPY, Nvidia, of course, AMD. So they were still going for these semis, IWM. Yeah, we had just noticed, over the past couple of days, the call buying was ridiculous. So that's really why we're seeing this sell-off. It's just, we need a little bit of a sentiment reset, a little bit of a refresher. And yeah, they were buying these call options in AMD out to November. Let's check out AMD. Nice, yeah, AMD. Hey, this thing was at 155? Yeah, 156, went all the way up there. A nice, decent sized correction here. So if it was at 156, yeah, it's almost like a 10% down move in 2 days. But yeah, it's still extended from the 20-day moving average. So that is the risk of entering things when they're super extended. You can get really whipsawed like this, and you never think it's going to happen until it does. We had Upstart. Whoa. Upstart, very mixed. What else do we have? Let's see what was going on in IWM. Whoa, VIX. Oh, now they're buying VIX calls. Now that the market is imploding. No, it's not really imploding, but into the vol, that's a party foul right there. And Alibaba, I did see, we're seeing some relative strength in these Chinese names. Tencent reported the other day. I am actually eyeing up some of these Chinese equities again. Alibaba would be towards the top of that list. Yeah, it was up 2.36% today in a red tape, but overall this chart is just not the best. Let's take a look at what else we got. Let's take a look at one more. I don't know why. Oh, especially when the market's down. This is when it's like, yeah, it's go time in terms of just like assessing the market, looking at the options order flow. So this is very interesting. NEO. We're seeing a lot of call flow to December, the 45 strike. November, yeah, December 35 strikes. March of 2022, 45 strikes. So this is very noteworthy, my friends. Yeah, NIO was down 2.68% today. Keep this one in the back pocket. Dang it, I want to take a look at another one as well. Okay, let's look at this Riot crypto stock. Everyone loaded on calls. What could possibly go wrong? And Riot was down 8.45%. That about does it for this market recap video. Hope you all have an awesome rest of your evening, and I'll see you all tomorrow.